see you've got the Amazon chart pulled up.
Oh
I told
boy.
you look, didn't you? Did you look or did you not
Okay.
look?
All right.
Okay,
No, I
go
didn't.
ahead.
No, I didn't, because I don't pay
Go,
attention
go
to you.
ahead. Go ahead.
Um, all right. So today's Friday, August 5th. We're finishing up the first trading week of August. Wow, the year just seems to be flying back. It just seems like yesterday that we were trading in January with all that huge volatility. Things have changed a lot, and yet we still have tremendous amount of opportunity. Part of the trick of being a successful trader is being able to recognize where the opportunity exists, being patient, waiting for that opportunity to present itself, and then knowing how to take advantage of it. So I'm going to give you just three things that I want you to think about for each trade. You want to jot these down, that's fine. But I'm going to give you three things that you need to decide on each trade. So these are three different levels of decision making that go that are all part of getting into a trade. I'm going to assume that prior to you taking a look at these three things and entering the trade, that you as an independent trader have already decided how much capital you are willing to put at risk. I get a lot of questions because of the different programs that we offer. We have a profit builder program for newer entry level people and people who just don't have a lot of time to trade but have an interest in learning how to trade. We have our new Profit Maker program, which we actually just announced yesterday, which is all about teaching more advanced spreads like calendar spreads, diagonal spreads, how to migrate from one strategy to another strategy using our more advanced market tamer spread strategy. And then, of course, we're going to be spending some time teaching and talking about our most advanced management technique, which we refer to as the seed iron condor. All right, so we get a lot of questions because of those programs. How much money should I have in my account, Mark? And I never want to appear flip about that, but the answer is how much money do you want to have in your account? How much money are you comfortable putting at risk in your account? I would never assume to tell anybody how much money they should trade. And we may share results, which we do on our Profit Builder program annually and on our Profit Accelerator and Live Trading Room every quarter. And I think people want to mimic those results, so they want to know how much money they need to put in. And I frankly am just hesitant at telling people how much they should put in because I don't know your individual situation. If I tell you, and I do provide some guidance that 25,000 is a good number for the live trading room, I think to be able to generate our $400 a day objective that we set as our goal for the live trading room. But the problem I have with that is that I don't know if $25,000 is 1% of your assets, 10% of your assets, or all of your assets. And there are three very different levels of concern about risk. So I put it on you to start every single day by having some idea about how much am I willing to put at risk today? What do I feel comfortable putting at risk? It's not about the trade. It's not about the stock or index you're trading. It has nothing to do with that. You have to make a decision about how much risk you're willing to put in play well before you ever find your first signal, your first trade entry signal. All right, so we're going to assume that you've already decided how much risk to put on. Now, there are three levels of decision making that you have to make after that. Trading is all about making decisions. Some decisions are going to be a little more challenging than others, and sometimes you're going to make a decision that in hindsight you wish you would have made a different decision. That's okay. That still was a good decision because it's going to teach you something that you're going to use to benefit your trading going forward. So really, there are no wrong decisions. There are only opportunities to learn. Decision number one is, what's your entry signal that you want to take? Now, if you're working with the Able Trend charts and you've been working with them for a while, then you understand that there are sell signals and buy signals. There are sweet spot trades. There are sweet spot trades, but we need to wait for confirmation of the signal. You could take the sweet spot trade more aggressively. You could wait for the sweet spot trade to be confirmed, wait for that signal to be confirmed. That's a more conservative trade. But these are the decisions you have to make. Do I have a desire to be slightly more aggressive in my trading, or do I have a desire to be a bit more conservative? So that's the first thing. And you can take a look at just a limited number of uh, tradable equities. Sorry, I was distracted here just for a minute. You can take a look at a variety of stocks. You can take a look at just 1, 2, or 3 indexes. You have to take what we do in the trading room and adjust it to your own comfort level. Tailor it to something that you are comfortable with. Michael takes a lot of trades on NDX. I love trading NDX. But when I have positions that I'm holding or managing, I tend to shy away from NDX because it's a bit more expensive, and I'll focus on placing trades more on SPX or focus trades on RUT. They're less expensive, but give me the same potential opportunity. Maybe not as quickly, but they still have the same potential profit opportunity. I also like looking at stocks. I haven't looked at stocks for quite some time until the past month, simply because volatility got to such a low point in the indexes that we had just too many days in our live trading room. It just felt like we were watching grass grow, that there just were not that many opportunities. And when I say not many opportunities, there were signals, but we could tell from the movement that there wasn't enough follow through to apply the strategies that we were using and be able to harvest a profit. So we started looking at more stocks. And this is part of that flexibility that you have to exercise as a trader. I now look at Priceline, which is, in my opinion, a stock that acts very much like an index. I love trading Priceline. I've traded Priceline a lot in the past, and more recently started to trade it again. And the beauty about trading these stocks or indexes is the able trend signals are going to work just as well. You just don't have to know that it's a stock versus an index. The able trend signals work equally as well, and you can apply the same strategies that we use on both. So I'm looking at Priceline. I'm looking at ISRG, Intuitive Surgical. I'm looking at Amazon. Those are 3 of my my favorite focused stocks. And then I'm also looking at Google and CMG, Chipotle Mexican Group. So those are the stocks that I look at. And I have my able trend charts set up so that I can just toggle between 2 screens and basically see all 5 of those stocks, 3 time periods on each stock, the 515, the 30/90, and the 120 daily. Those are the 3 time periods that I look at on stocks. And then on indexes, I look at the 3/9 and the 515, primarily for my triggers. So you have to decide how much capital you're going to trade. We already agreed on that. And then you have to decide what it is you want to trade. You might not want to look at 5 stocks plus 3 indexes. You might want to look at a single index. Maybe you're someone who only wants to trade the S&P 500. That's fine. You know, there can be 10 different people, 10 different traders in a room together, and 10 different traders can be looking at the same types of signals and trade in 10 different ways, and still each of them achieve a level of success. There's no one single right or wrong situation in these cases. So the first decision is the entry signal. What are you going to take? What are you willing to do? Depending on how many positions I have open, I vacillate between, sometimes I'm slightly more aggressive. Michael will see a trade go off sometimes where he's waiting for the confirmation of the signal. Those are the times where I'm choosing to be slightly more aggressive. If I have more positions already in play and I have consumed a portion of my capital that just makes me want to just hold off a bit more now, I'm willing to take maybe a trade or two, but I'm going to wait for a conservative entry, which means when I see a signal, I'm going to wait for confirmation of that signal. The second decision you need to make then is, what are your strikes and expirations? Michael's choosing very often deep in the money strikes and expirations that are maybe 1 to 2 weeks out. I have a tendency to choose expirations that are a little bit further out, and I tend to go not as deep in the money, may go at the money, or even in some cases out of the money. But all of that decision making is tied to, first of all, how much capital am I willing to put in? It's also tied somewhat to what I think the opportunity is and setting myself up for potential management of the trade if it doesn't work out. And that leads me to decision making number 3, which is how to cover the trade if in fact it doesn't work out. It all ties to the strike placement. If I open deep in the money, I can create a long vertical spread if the index or stock starts moving against me. And because it's deep in the money and both of my strikes are in the money, I can win on that trade even though it ended up moving against me. If I go far out of the money, I can create a credit spread that's out of the money if the stock or index starts moving against me. If I go at the money, I could do either one, just depending on what I see as the bias of movement. So the point I want to make here, the headline for this is, you have to clearly understand what levels of decision you're making. And not every decision point is segregated from the other decision points. I'm going to decide how much capital I want to put at risk. That's going to influence the strikes and expirations that I may choose in the money, out of the money, at the money. And whether I'm in the money, at the money, or out of the money is going to influence the type of management that I may consider putting on. Now, newer traders, lesser experienced traders will frequently ask, well, what are you doing about management on that trade after they're in the trade? You should really understand what it is that you think you might be considering doing if that trade doesn't work out. And that just comes from some experience. You need to get to a point where not only do you know how much capital you're comfortable putting at risk, so you're not going to lose sleep over having that risk, but you also need to know, even before you press send on that trade, what action you would take generally, but maybe not specifically, but generally what action would you consider taking if immediately after opening this trade, the index starts moving against your position? What action are you going to take? You may know that you can create a spread. You might not know specifically at the time whether it's going to be a credit spread or a debit spread or what strike you're going to open to create that spread, but you've got to have some sense of what it is you're going to do before you get too far down the road here without a plan. And I've done this, what I'm about to say, I've done this. I know all of us on my team have done this, but trying to create your plan as that stock or index is moving rapidly against your position starts to cause a heightened level of anxiety and frustration and anxiousness that all of a sudden makes you feel like, I got to make a decision right now, I got to do something. Having an idea of what your plan is going to be, what your coverage is going to be, even before you open the position, allows you to start researching your options. Now, ideally, you want to be able to close that trade out for a profit if you're day trading, or you need to create a spread for a guaranteed profit if you're legging in. But you want to have some idea up front of what it is that you're going to do. So that's just kind of a general thought process. Now I want to talk about a couple of stocks, a couple of positions here, and I want to point something out about a trigger. I've said many times on these mid-market summaries that I trade almost entirely off of the Able Trend signals. And the reason I do so is because they are very, very, very profitable signals. They are going to tell you, in my opinion, more often than almost any other, well, I'm going to say any other, not almost, any other software package, chart technical package that I've worked with. They're going to tell you, they're going to provide for you more setups for trades. It doesn't guarantee that your setup and your trade is going to be profitable. There's no guarantees in this. I'm just telling you, after 30 years of trading, the AbleTrend signals are going to provide for you something that I haven't found any other charting package provides. The one exception to AbleTrend, the one signal that I will take that does not correspond to AbleTrend, is a very, very simple Bollinger Band snap pattern. Now, Bollinger Band snap is a terminology that we use at Options Moneymaker to describe a situation where the price of a stock, and I'm looking at Priceline here, has moved significantly above the upper Bollinger Bands or significantly below the lower Bollinger Bands. Now, one of the things that we accept as a given is that the integrity of the Bollinger Bands allows us to know that when the price moves up in the area of an upper Bollinger Band, there is an increasing likelihood that there's going to be a reversal and price movement back down to the lower Bollinger Band. And same thing, when it hits the lower Bollinger Band, there's an increasing likelihood that we're going to see the price reverse. Now, I'm saying an increased likelihood. I'm not saying it's going to move back to the other side of the band. I'm not saying that because it doesn't happen all the time, at least not immediately. And here's a great example on Priceline. It moved up to the upper Bollinger Band and it walked right along the upper Bollinger Band, flattened out a little bit there, and then it continued to really walk along the upper Bollinger Band until it got into a sideways pattern. This is why we learn how to manage and adjust positions. I want to, with confidence, take positions based on a Bollinger Band snap, which I'll specify here in just a minute, because I know that historically, a high percentage of the time, the price is going to reverse in a very near time frame. So as an example, right back here, I think this is on the 20th of July, we had a Bollinger Band snap. And what that means is the price moved above the upper Bollinger Band. It continued to trade the next day above the upper Bollinger Band. Was slightly above the upper Bollinger Band on day 3, and then it reversed and headed lower. So that's an example. Here's another one where it's above the upper Bollinger Band, and immediately the next day it reversed and headed lower. Here's one that it was extremely above the upper Bollinger Band and then continued to move higher for a couple of days. This is a 60-minute chart, and then it moved lower back down to the lower Bollinger Band. So my point is, whether you understand it or not, I challenge you to go look at your own charts and see the number of occurrences and get comfortable with the Bollinger Band snap. My personal bias is it's the one trade execution that I will take even when there's conflict with the short-term AbleTrend charts. And it's because I've traded so many Bollinger Band snap patterns that have proven to be excellent profit opportunities. Sometimes almost an immediate profit opportunity where you get into it and it seems like within an hour you're out of it for a profit or locking in for a guaranteed profit without a day trade. And other times it takes longer, but I like to be patient with these. So today we had a very strong Bollinger Band snap on Priceline. Now let me go to the 1-year daily. The 1-year daily chart very clearly shows that the bar, the current day's bar, is still actually floating above and outside the 2 and 3 standard deviation Bollinger Bands. If I was just coming to this trade now and looking at it, I probably would still consider getting into a declining bias trade Even though the high today was 1435 and we're currently trading at 1421, even though we've already given up and retraced 14 points, the fact that we are above the upper Bollinger Band tells me I would get into that trade now because I like Bollinger Band snaps. So I wanted to really emphasize that as a potential trade. Now, many of you in the live trading room have followed along with some of our Bollinger Band snaps and done quite well. And it doesn't exempt you from understanding how to manage your trade if it doesn't work out. I'm just going to give you a quick view here of the Priceline 5-year weekly chart. So each bar represents 1 week, and you can see where we're trading well above the 2 standard deviation Bollinger Band on the weekly chart. You can see a few times that this has occurred before. Back here in October of 2015, continued into the first week of November, and then, wow, it just dropped like a rock after that. You can see here in August of 2015, we had an extreme 3 standard deviation Bollinger Band snap, and by the next week, it was trading down inside the Bollinger Band. So I really wanted to emphasize this as a tradable opportunity because I believe that no matter how advanced you desire to take your trading, and no matter how active you decide your trading to be, you need to understand some very, very simple entry opportunities. You've got multiple time periods on AbleTrend, which should be, in my opinion, 99% of all of your trades. And then you have Bollinger Band snaps, which I just use a simple bar chart to look for those. So that's Priceline. Let's take a look at NDX. NDX this morning moved up to a high of 47.99.86. At that point, we were just about 17 points off of the all-time high for NDX, which is around 48.16. Not a Bollinger Band snap. Trading right in an area of resistance. I haven't done any adjustments to my charts yet today, so I want to do that. I'm going to manage this here. And as I've explained before, what we're doing here is we are in search of the next market high, the next market top, but we're waiting for the market to tell us where it wants to pause. So what I've done now is I've shifted into a slightly rising channel that still ties back to previous points of resistance. And the reason we keep shifting the angle of this channel is because we're not locked on support. We only have 1 point of support. So there's a little bit of a pivot. So this is an exercise in trying to figure out where do we find the top. If I take this down to a 60-day, 60-minute chart again, I'm doing this for one specific purpose. When we moved lower, we formed a Bollinger Band snap on the lower band and we bounced back higher. And notice how we walked right along this line of support. That, to me, folks, is just nothing more than a confirmation that we're still in an overall rising pattern. And if I didn't believe that, all I have to do is look at the long-term AbleTrend charts, the 3090, the 6180, the 120 daily. They're double stacked to the upside. So everything aligns, everything corresponds to those indications. But now that we've bounced back higher and we have a Bollinger Band snap on the 60-minute, look at what's happened with the recent price activity. Where I dragged my resistance line up to that single daily high, looking for a top, we can now break that daily price bar down into 4 bars, and we see that the last 3 60-minute bars have stalled out right at that level of resistance. Just like support, the price was moving lower, but it stopped right at support and it walked right along that rising level of support. So what I'm going to do is I'm going to extend this out, and we now see that we have a wedge pattern that has formed between that rising support and that slightly rising resistance. Somewhere in this time period, we're going to see a break either above or below, above resistance or below support. Take a quick look at SPX. Because SPX, we have not been modifying our sideways channel because it seems to have stalled there. And today, on the daily chart, we see that we moved right up to that level of resistance, peaked above it just a little bit, formed a new all-time high today at 2182.33. That is another new all-time high, and it's pressed right against the one-year daily. It's pressed right against the upper Bollinger Band on the daily chart. When we break it down into the 60-day, 60-minute, you can see that we had a very strong Bollinger Band snap. The Bollinger Band started to flare out, almost catching up with the price. And now we've kind of flattened out right here and just drifted outside the Bollinger Band. I still think that this pattern tells us that there is some opportunity for retracement back to the downside, but we're going to have to wait for the market to tell us whether or not that's true. And then RUT, now RUT has actually moved above the resistance that I was tracking. And I was tracking that resistance looking for confirmation of a top. We have not gotten that yet. So let me make an adjustment because I'm still in search of where the market wants to set its new high, its top in this cycle. This rising cycle has not completed yet because the market hasn't decided for it to complete. But you can see on the daily chart that we have a Bollinger Band snap. So the fact that we're starting to see some consistency on Bollinger Band snaps on all three indexes, plus we had Bollinger Band snap on one of the huge stocks that is part of those indexes, Priceline, is all indicative of we just need to be patient and wait. There's nothing wrong at all with trading rising bias positions here. I know Allison had a calendar spread that she closed out today. That was a call calendar spread, took advantage of rising bias. Michael's been trading some long calls. So I want to be very clear that you should be trading according to the Able Trend signals. And if the short time periods, 3, 9, and 515, are still showing double stack to the upside, they're showing sweet spot trades to take advantage to the upside, you should take those trades. You just want to know before you get into the trade what you're going to do to cover it if in fact the index starts to move against you instead of moving for you. So this is the thought process that you have to go through. It's not a singular, okay, I'm going to get in only on this trade, on this signal, and then I'm going to wait. And then if it doesn't work out, I'm going to look for something to do. You've got to commingle all of those decisions into a fluid set of decision making to know what you're going to do when you get into the trade. I'm in a rising bias trade in a market that appears to be reaching some pretty lofty levels, showing Bollinger Band snaps on 60-minute and daily bar charts, which tells me that there could be a reversal, but I don't want to be hesitant about going long because Able Trend is my bank. Able Trend is my biggest paycheck, and it's telling me that I got a sweet spot trade to go long. I'm going to take that trade, but I want to know how I'm going to cover that trade, and I also want to know how much capital I'm willing to risk. All of those things are the decisions that you need to bundle together. You need to be making them in a real-time, on a real-time basis as you are trading. Okay, if you're not sure what to do, what I suggest is you trade virtually, place some paper trades, and get comfortable with that decision process. Get comfortable with where to place your strikes. The placement of your strikes is going to likely be different than Michael's placement of strikes or my placement of strikes, but we can all benefit from the same signal. Your placement of strikes is going to be driven primarily by how much you're willing to put at risk, what your comfort level is. And it's also going to be influenced by what you think that the the overall bias of the market in the bigger picture is. So that's my 2 cents worth. I really just wanted to take an opportunity to emphasize those Bollinger Band snap opportunities. I think that they are hugely hugely profitable when you understand them, and yet I wouldn't, if I were you, trade them just simply based on what I said. If I were you, I would sit down with my bar chart and I would start by pulling up maybe a 2-year daily, and I'd go back and look at the number of times that I had a Bollinger Band snap pattern occur. And you might find that there are differences in the frequency of the retracement between indexes and stocks. But give yourself that education. It doesn't cost you anything, folks. That is an education you can provide yourself. I'm giving you the snippet of information. You can go do a little legwork and understanding education for yourself, and that's what's going to help you feel confident or not in taking Bollinger Band snaps. Here's a Bollinger Band snap pattern on RUT that, wow, that thing just didn't work out very well. And this is exactly why I would want to know how to manage a trade before I got into it. Seeing this pattern, one of the few that didn't work out, it didn't bounce, it didn't retrace the way I would have liked to shortly after the first Bollinger Band snap. But that's not going to keep me out of the trades because I know that historically the majority of them do work out. But this is exactly why I want to have a good, solid strategy for managing the trade. So I hope that's helpful. Michael, let's just take a quick look at your Able Trend charts
Okay.
on the indexes and on Priceline, if we could.
Okay.
You want me to give it to you, or are you taking it?
I'll grab it. Okay. Here's Priceline, Mark. Let me refresh to make sure we all got the right data, but it should be it. Yes.
All right, so the 515, we see what happened this morning at the open. All right, that's where we formed that Bollinger Band snap on my 1-year daily, and then we flattened out. There really wasn't much movement at all. Then we saw a sell signal, but tell me about that sell signal, Michael. Why wouldn't you have taken action based on that sell signal?
Well, because the support's still printing, the 15-minute support here is still printing along the under the sell signal.
So if the blue dot after the sell signal had not appeared, we would have considered that to be a valid sell signal?
Yeah, well, I mean, if this sell signal came on right here, you'd wait 3 bars to the right to make sure that this is not going to print again, that
Right.
the support won't print again. Yes.
Okay, so we just want to confirm that support quits printing when we see the sell signal.
Yes.
The good news for us is that we see that resistance started printing, and so the price of the stock is really trapped in a very, very tight range between 5-minute resistance and 15-minute support.
Yes, it is.
And we're just waiting. Now, let's just pause on Priceline here for a minute because you and I took different approaches, but we both got into Priceline on the Bollinger Band snap. I got in to Priceline because I held a long put that was out of the money. I only held one contract, and I'd already taken a $1,300 profit by buying to close a short leg of my original spread. But now I had an opportunity to add more contracts to my long leg, cost average it, and improve the likelihood that on the next move down, I'm probably out of the whole thing, allowing me to keep that $1,300 and maybe add some more profit to it. But you took a different approach. And what was your approach?
Mark, I actually opened up an in the money. It was the 1440 put for October monthly. Is what I did.
So October, you went out to October, so you gave yourself a lot of time on this.
Yes.
And you went in the money. The index was trading right around 1435, I think, was the high today. So you went like one strike in the money.
Yes.
What did you pay for that in the money?
$61.30.
Okay, one contract.
Yes, one contract. Yeah, that's all.
So you've got a
Wish I'd have
6100
traded 10 now. Wish I'd traded 10 now, but go ahead. I'm sorry.
you got a $6,100 risk commitment, and
Yes.
so you had to feel comfortable that putting $6,100 in was okay for you and your account.
Yes. Yes.
Now, let's just touch on this for a minute because practically speaking, do you actually have $6,100 at risk? The full
No, no,
6,100?
no,
Because we're never going to let it go to a complete loss. Is that right?
no. Correct.
So you're going to cover it at some point. If it starts to work against you, you're going to sell a strike against it to turn it probably into a long put vertical spread,
Yes.
maybe a calendar spread, but you can dramatically reduce your overall risk in the trade by selling something against it. So
That's correct.
6,100 is Michael's initial risk, but he can manage that probably down. I'm just making this up. I'm guessing at it. He can probably manage that down to no more than 1,500 if he wanted to.
Yes.
So the stock has come down a bit. Do you have a profit in your trade?
Yes. Yes. The mark is 66.70 is what the mark is. So it's about a $5.40, 30 something cent
Yeah,
profit.
that's a
Five.
great
Yeah.
that's a great profit. What would make you decide to hold versus um, close out and take a profit?
Watching the 5 minute chart here, it looks like we're continue to step lower. It looks
Mhm.
like the resistance has, and then so that's what I'm watching right now.
So it looks like it's starting to weaken. So you're using the Able Trend charts to help you make a decision to just continue to hold for right now because it looks like it's
Yes,
starting to weaken. Now,
that's right.
just and I'm speculating now, asking you to give me a uh, theoretical um, decision. What if all of a sudden a buy signal flashed on Priceline?
I would close that 1440 immediately.
Brilliant. I mean that's exactly what I would do. We don't always do exactly the same thing because we're two different types of traders, but that's exactly what I would do. Right now, folks, he's got 5 minute resistance stair stepping lower, which may, no certainty yet, a weakening of the price. If it continues to move lower, wow, he can make more than what he's already got. If all of a sudden something indicates that we're breaking above that resistance, or maybe resistance stops printing, or there's a buy signal, he can very quickly close it out and take his profit. That's a good profit
Yeah,
on that risk.
yes, I think
Um,
so.
yeah, good job on that. Let's just take a quick look at NDX and then we'll call it a day.
Okay, there we go. Let me refresh to make sure we got all the right numbers. So here we go. Okay,
Okay, so NDX, I'm just looking at the 3 9 minute. If I
yes,
was trying to decide on opening a new position, that's a very interesting pattern right there.
it is, isn't it? Yes,
Well,
it is.
how do you interpret that? What does that tell you? Because we've got 9 minute support printing almost at the same level as 3 minute resistance.
Yes, very tight range. It's going to break one way or the other, but that's very tight. That's ultra tight.
So there's nothing really in that pattern on the 3 9 that would help us understand which way it's going to break.
No, no.
And that's one of the things that folks you got to be patient about. Don't start getting ahead of yourself and reading into the chart something that doesn't exist. Um, you start to see the red building. You could talk yourself into thinking that, oh yeah, this thing's going to go lower. This would be a good place to get in. That's not a good trade setup. And I'd rather spend the entire day looking at potential trade setups and not take a trade and still have all of my capital than start jumping into what I'm just going to call a very weak or wishy-washy trade setup. You don't want to do that. We've talked about this in the live trading room many times about you don't want to start trading out of boredom. You want to trade because you've got a great signal to trade. And if I was in doubt, I might look at the longer term time periods, and you can look at the 30-90 right below in the lower left-hand corner and see that we're double stacked to the upside. So that would keep me out of a declining bias trade. Would I want to get into a rising bias trade off of the 30-90? I personally would not, only because I don't typically trade on those longer time periods. I want those short-term time periods that are going to give me a better indication of what the likelihood of the cycle is. I want to trade the cycles. I'm not trading the trend as much as I'm trading the cycles. Any other words of wisdom, Michael?
No, Mark, I think that's good stuff there. I just waiting on some signals here. That's all.
Okay, well, let me just thank everybody for being here in the live trading room. I know several of you have just been listening in this week and kind of observing and seeing what we do. We have some weeks that are relatively slow. We have other weeks which are very busy. We had, I would say, a relatively slow week this week, slower than most of our weeks, but that happens. We have other weeks that are very productive for us and very profitable for us. That's not true this week, and yet we made money this week. How much money have we made this week, Michael? I was just starting to take a look at it. I'll pull mine up here. You still there?
I'm sorry, Mark, you broke up on me. What did you
Oh,
say?
I did. I was just checking to see what our profit for the week has been.
Oh, okay. Hold on one second. I'll do that real quick. I apologize. Hold on.
I've got it right here.
Yeah, okay.
4197.90, $4,197. $4,197.90. So over a 5-day period, that's after fees and commissions. That's a net number. We averaged for this week $839.58 for the week per day. $839 per day. So our goal is $400 a day, and it felt like a very, very slow and cumbersome and quiet week, and yet we managed to accumulate $430 a day of profits. I'd say that's pretty good. Pretty happy with that.
That's excellent. Yeah, you average it every day. It's around 96 a year. So if you average $400 a day, which is very doable.
Yeah, and this week is a good example of that. We didn't have a lot of activity this week, but we still,
No.
because of the positions we did have in place, and because of my decision to be somewhat reserved this week for a variety of reasons, we still are able to hit that average. In fact, beat that. We doubled that average for this week. So we're pretty happy with that. So anyway, thank you everyone for being here. If you're part of our live trading room and you're here on a regular basis, we really appreciate being part of our trading day. If you're brand new to the live trading room and just observing, hope you found something that was beneficial. Michael does a phenomenal job at walking you through his thought process based on AbleTrend charts primarily, but he's going to give you his input also based on his experience as a trader for many, many years. And Michael and I have traded together for many, many years. And he also has a vast amount of knowledge on other technical aspects of the market, and he'll share those with you as appropriate. What we're here to do is to trade. Michael's trading his accounts, I'm trading my accounts. But we're also here to share with you what we are doing, and if it helps you to trade and learn, then that's awesome. That's what we love to know. So again, thanks for being here. I hope everybody has a great weekend, and we will be back on Monday.